Thank you for joining me today to go over some highlights of Budget 2025, which will also serve as the 24-25 third quarter fiscal update. This past year has been one of many ups and downs as we continue to face many challenges that impact our budget and decisions going forward. Budget 2025 reflects those up and downs and meets the challenges facing Alberta with responsible decisions to fund the priorities of today. It meets the challenge of the high cost of living with a tax cut that keeps hundreds of dollars in Albertans' pockets starting in 2025. The budget meets the challenge of a rapidly growing population with the highest ever investments in education and healthcare. And it's meeting the challenge of uncertainties in trade and security by focusing on diplomacy and the economy. Meeting the challenge means being clear-eyed about what's right in front of us and being ready to address it. It means doing the right things when we ensure to remain steadfast in the face of headwinds. It means not losing any ground we've worked so hard to gain, while also doing what we can to maintain our advantages so we can continue building on them for future generations. So let's take a look at our economic situation now and going forward. Our economy was on solid footing at the end of 2024. The province added almost 63,000 jobs in the last quarter of the year. The energy sector was firing on all cylinders. Oil production hit a record of 4.3 million barrels per day at the end of the year. Activity in the housing market was surging, while construction in the industrial sector was also ramping up. However, with uncertainty on the rise, Budget 2025 takes a cautious approach. We've built in an expectation that the province will be facing tariffs that will significantly impact our province. These measures will dampen Alberta's trajectory for growth. While Alberta's real GDP expanded an estimated 3% last year, we are forecasting it to slow to under 2% this year and next. We expect to do better than other provinces, given the composition of our economy. The energy sector is in a good position to weather the storm, but other sectors are expected to be hit hard by tariffs, including manufacturing and agriculture. This means that we are expecting the unemployment rate to remain high this year. In fact, it is forecast to average above 7% on an annual basis over the next 2 years, peaking at 7.4% in 2025 before dipping slightly to 7.2% in 2026. But there are some bright spots. The housing market is expected to stand out as home builders continue to play catch up with the rapid increase in demand over the last few years. Despite challenges, investment intentions are strong, and we expect to see progress on major projects in the province, albeit at a slower pace. Our population will continue to grow, and people will continue to spend and support the economy in the province. Many who come to this province join the workforce, start paying taxes, send their kids to schools, and use our roads to travel for work and leisure. They head to doctors' clinics or hospitals with their families to seek access to healthcare, surgeries, or emergency care. All of this is putting pressure on our public services and programs at a time when we have fewer dollars in revenue. Revenue is estimated at $74 billion in 25-26. This is $6.6 billion lower than the 24-25 third quarter forecast of $81 billion. The evolving situation with Canada-US trade relations is bringing even more uncertainty to the province's revenue forecast, and this is reflected in the forecast for oil prices. The West Texas Intermediate oil price is expected to average $68 per barrel in 25-26, which is $6 lower than in 24-25. While the price of oil is expected to increase to $71.50 per barrel by 27-28, I want to remind you, for every dollar drop in the price of WTI, it carves out about $750 million from our bottom line. This is what we must plan for. Tax revenue is also expected to decrease by about $600 million from the 24-25 third quarter forecast. That's mainly due to the introduction of the new personal income tax bracket that will save Albertans $1.2 billion in 2025, as well as the estimated impact of tariffs. This is why we are leaning heavily on our fiscal framework to guide budget decisions and closely evaluate our fiscal situation throughout the year. When we are faced with dramatic reductions to our revenue, the framework allows us to run deficits, as long as we return to balance within 3 years of the year-end results. Budget 2025, if passed, will have a deficit of $5.2 billion, dropping to $2.4 billion and then $2 billion the following 2 years. We made the difficult decision to run a deficit so that we can direct and target our spending to the top priorities of Albertans. Total expense in 25-26 is forecast at $79.3 billion, an increase of $4.4 billion or 5.9% from 24-25. This includes a $4 billion contingency, double the amount set aside in Budget 2024 to cover unexpected in-year expense increases and support communities and Albertans during natural disasters. This increase is key to provide government with more flexibility to address unforeseen implications of increased economic uncertainty, as well as compensation expense for collective bargaining currently underway. We're also investing record amounts in healthcare, education, and infrastructure to meet the needs of our larger population. Last year, our population grew at a record rate of 4.4%, or more than 200,000 people. That's like adding another Lethbridge or another Airdrie to our province, and we're set to reach 5 million people in 2025. That has made it difficult for many Albertans and families to find family doctors and has put pressure on every aspect of the healthcare system, from surgeries to emergency rooms and beyond. Budget 2025 invests $28 billion in operating expense for a refocused healthcare system to boost care across the spectrum of services. We're investing $644 million for primary care to attach every Albertan with a primary care team and improve access to family doctors, frontline healthcare professionals, and nurse practitioners. Acute care receives $4.6 billion to help meet volume and costs and to improve acute care in hospitals, urgent care centers, and other health facilities. We're supporting addiction and mental health services with $1.7 billion. This will help people with addiction and mental health issues access the supports they need to pursue recovery and wellness. We continue to build recovery communities across the province, expand mental health classrooms, and implement the compassionate intervention framework. We are transforming continuing care, providing $3.8 billion to Assisted Living Alberta to provide wraparound supports to people, home care, and more. With every budget decision, we are prioritizing patients and improving service delivery. Schools are also feeling the pressure from Alberta's population growth as more families and students need access to quality education to gain skills and knowledge for success. Budget 2025 provides $9.9 billion in operating expense for 2025-26 for education. This is the highest ever budget for education in the province. We're investing in schools to help them with enrollment pressures. Almost $1.1 billion will be provided over the next 3 years to address growth and to hire more than 4,000 new teachers and classroom support staff. With support from Budget 2025, school authorities will be able to add staff and supports to complex classrooms so students receive the focus and attention they need. We're earmarking $1.6 billion in 25-26 to support students with specialized learning needs and groups who need additional help. We're investing in the future of our kids and grandkids. This investment into Albertans today and into the next generation continues with Budget 2025's capital plan. The capital plan invests $26.1 billion to build the schools, hospitals, highways, and bridges Albertans need. That's $1.1 billion more than Budget 2024, or a 23.9% increase to support projects across Alberta. This includes a capital investment of $225 million to advance planning and design of 30 new schools across the province, 5 replacement schools, 3 modernization projects, 3 public charter school projects, and more modular classrooms. As part of the School Construction Accelerator program, we remain committed to fast-tracking the construction of much-needed schools in rapidly growing communities across the province. This important program aims to deliver more than 100 new and updated schools, or about 200,000 student spaces, over the next 7 years. That's an intergenerational commitment we're making to Albertans and families. Budget 2025 also invests more than $3.6 billion over 3 years for healthcare projects, which will help increase access to the healthcare Albertans need. We're building more operating rooms, renovating existing space, and buying new equipment to increase the number of surgeries available to Albertans. We're developing specialized mental health and addiction facilities to provide compassionate care to adults and youth who are in danger to themselves or others. We're building more continuing care facilities that will help transform the care available to seniors, people with disabilities, and people who are homeless. We're enhancing diagnostic capabilities across the province to help diagnose people faster so they can receive the care they need. We're supporting the development of 11 recovery communities across Alberta to support people with addiction and mental health issues. Already, 200 beds are open, and the Calgary Recovery Community is set to open in 2025. We're investing in urgent care centers, rural hospital enhancements, cath labs, and a genetics laboratory to support our newborn screening program. Budget 2025 supports more ambulances, more medical equipment for improved health outcomes, amongst a host of other projects. Our capital plan also invests in other priority areas to support Albertans and the growth of Alberta's economy. This includes $1.1 billion over 3 years for family, social supports, and housing, $528 million over 3 years to support the modernization and expansion of post-secondary education facilities, $2.5 billion over 3 years to support Alberta's network of provincially owned roads and bridges, and $7.5 billion over 3 years in municipal infrastructure support. Budget 2025 also meets the challenge we face today about security concerns over our shared border with the United States. We're investing $25 million for our Alberta Border Security Initiative to purchase equipment and develop Border Patrol facilities, and we're increasing funding to public security, mainly to secure the 298-kilometer wide Alberta-U.S. border. A new interdiction patrol team will combat drug smuggling, gun trafficking, illegal border crossing, and other illegal activities. More peace officers will provide enforcement along the international border and go a long way to keep Albertans and communities safe. This is just one way we're working to find solutions to a possible trade conflict. We're also meeting the challenge to create a prosperous and more stable future for Alberta. Budget 2025's significant drop in revenue shows we cannot rely on non-renewable resource revenue indefinitely. That's why last month the government released our plan to grow the Heritage Savings Trust Fund to $250 billion by 2050. We have already stopped using earnings from the Heritage Fund to supplement the budget. Instead, annual investment earnings will be left in the fund to grow. And a new Heritage Fund Opportunities Corporation will unlock access to new opportunities. A renewed Heritage Fund that grows steadily will secure a resilient and prosperous Alberta for generations to come. Future generations will be less reliant on non-renewable resource revenue and will be able to count on a more stable revenue source to support their priorities. This is just one other way the government is meeting the challenge. Alberta's government is making responsible, though difficult, decisions to fund the priorities of today. We're meeting challenges by being realistic about the risks we're facing that will impact our economy. We must do the right things to ensure we remain steadfast in the face of oncoming headwinds. And no matter what happens, we must be prepared. By keeping spending under control and directing every dollar to where it matters most, the province will maintain Alberta's position as the best place to live, work, and raise a family. Budget 2025 is meeting the challenge of the cost of living by helping families keep more money in their pockets with lower personal income taxes. Budget 2025 is meeting the challenge of uncertainties in trade and security by focusing on diplomacy and the economy. Budget 2025 is meeting the challenge faced by Albertans with continued investments in education and health. Thank you all very much.
All right, we're going to move to the media Q&A portion of today. A reminder that everything said by the minister in this press conference is embargoed until he begins delivering the budget speech in the legislative chamber, which will be at approximately 3:15. We're going to start on the floors. Please identify your name and your outlet. We will go with one question and one follow-up. Go ahead, Emmanuel.
Hey, Emmanuel Prestovet, Radio-Canada. Minister, you wrote this budget around the hypothesis that there will be 10% American tariffs on oil exports and 15% on the rest of Canadian exports to the U.S. But why aren't you preparing and actually budgeting for the actual threat put forward by President Trump, which is a 10% tariff on oil and a 25% tariff on the rest?
Well, it's a great question, and it's one that we've wrestled with for quite a few weeks. But what I think this shows you is a reasonable expectation. 25%, we do highlight that as a scenario in the budget. We didn't think it was reasonable to create the budget around that. No one's phoned me and given me any clarity. We're using publicly available information, relying on our economists. So I would say we think that this is a reasonable place to be. There seemed a lot more certainty around the 10% on energy. When you model these things, I don't want to comment on what the U.S. economy could sustain, but we think a 15% is a sustainable rate that could be left in. And when you don't know the duration, it could change. It could be 25% for a few months and come back to zero. So this has to be an average of the entire fiscal year. So we think this is a prudent place to budget from.
Follow up?
Yep. And even if there weren't any tariffs enacted over the next fiscal year in what you call the business as usual scenario, Alberta is still in deficit. And there are no signs of a return to a balanced budget nowhere in this budget. So is this responsible fiscal management, and what is going to bring Alberta back to a balanced budget?
Well, I think that should be the big question out of today. We would still be in a deficit without the tariff scenario. It would be much smaller. If you do the math between the scenarios, it'd be about 2.9 billion. And that is the task in front of me to provide a path back. Our fiscal rules clearly state that once a deficit is posted, you have 3 years to provide a path back to balance for the province, and that's the work that we'll be doing.
Go ahead, James.
James from the Western Standard. Minister, some say that Alberta is sitting on the equivalent of at least one Saudi Arabia, possibly two. How is it conceivable that we're still having a conversation about deficits, and is it time to perhaps re-examine royalties?
I would say that our royalty structure is legislated. There is a timeline on that. What we have is a very fortunate place where you saw last year 20 billion in resource royalties, and that allows us to have the tax structure that we have. Very fortunate place. I think the important thing is using it appropriately. The fiscal rules allow us to not be too reactionary. It gives us time. As long as we manage the surpluses well, we can make appropriate plans when we're in deficit cycles. But I would also maybe just take your attention to the sensitivities. The tariffs is one thing. Obviously, we have more uncertainty right now, but our own balance sheet forecasting ability is more volatile. We saw the WTI sensitivity assumptions go up again. They're now at 750 million for every dollar of WTI, and the differential is right there as well at 740. But I would say, we're at a place now. I think this is a watershed moment for Alberta. We're still trying to catch up and chase the population growth that we've seen, which is a good problem. I would much rather that than decline. But we're going to need to have hard conversations as Albertans about what we expect government to fund, the services that we want to see, and that will cover all of these potentials.
Sure. And what are you expecting, or what are you hoping for in terms of new revenue streams going into the next, say, half decade?
That's a great question. There is a lot of opportunity in different resource spaces. We're trying to build out those frameworks and be prepared for when the opportunity is ready, that the province won't be holding that back. You're seeing a lot of that around the world, a lot of excitement about quantum computing and AI possibilities. We're a very strong resource base. We're very fortunate to have all of the things that we have. So I think Alberta will be seen as a place where all of those things have potential.
Go ahead, Julia.
Hi, Minister. So the budget incorporates that 15% tariff on everything except energy products. You also then mentioned that there might be 25% tariff and then there might be zero. I mean, is there something that the Alberta government knows that the rest of Canada does not?
Absolutely not. I maybe should have made that clear at the start. I haven't received any clarity. We're using publicly available information. I know our economists have leaned on the Congressional Budget Office, the things that they have published as well. So we're making our best and most reasonable guess at what could potentially be in front of us.
Follow up.
And also, just generally, I mean, how do you plan for a budget when there are so many unknowns, when you have so much unpredictability with the US president and what he may or may not say in the coming days, weeks, and months?
It's extremely tough. I'd maybe start there. I think we've seen the commentary from some of the other provinces. I know they've kicked around different things like using interim supply and kicking the budget down the road to seek more certainty. I don't know if there will be more certainty in a month or 2 months or 3. We thought it prudent to, stick with our timeline and provide the most reasonable case that we could. And it's not like we did this yesterday either. I think the forecast was in on February 6th. Many things have changed and been pushed back since then, which I think, provides a little bit of clarity that we're going down the right path. We're picking a prudent place. If it happens, budget for the worst, hope for the best, and make sure government has the flexibility to respond.
Thank you for that. We're going to go to the phones for a few questions. Operator, can you put through our first caller?
The first question comes from David Staples of Edmonton Journal. Your line is already open.
Thanks for taking my call, Minister. There's a lot of economic uncertainty. You're going to be running deficits. You project the next 3 years. Some people would say you should take a real prudent approach and not bring in tax cuts. Why are you bringing in tax cuts right now?
Well, beyond the fact that it was campaigned on and promised, I think now may be the absolute most important time to bring it forward. It's one thing to look at what Alberta can withstand through all of this uncertainty and forecast from a government of Alberta revenue perspective, but it's the same uncertainty and has the same potential consequence for Albertan households. And so we think it's important right now to provide them with some affordability tools to try to withstand this with us.
Follow up, David?
Minister, one of the uncertainties going forward is the possibility of an excise tax from Ottawa on Alberta oil and gas to the United States. Mark Carney was recently asked about this, and he said it's one of the cards that might be played. What would be the impact on the Alberta budget of an excise tax from Ottawa?
Well, I can tell you, in our tariff scenario, we use the best information we have on potential for reciprocal tariffs. So, in the base case, in our budget case, I believe we used 2 of the 3 tranches that were laid out by the federal government. Anything above and beyond what was laid out by them, we would have to do the math on. One thing I also want to say, because I'm sure it'll be a question that comes up at some point, is, expectation of support. If the federal government does use reciprocal tariffs, I would and gain this revenue source, I would certainly be advocating and advising them to provide the support of that new revenue.
Thank you. Operator, please put through the next caller.
The next question comes from Janet French of CBC Edmonton. Your line is already open.
I just wanted to ask about the education property tax. They will make up a larger proportion of education funding by the look of it, up to 31%. So given that education operating spending is, expected to grow along with inflation in our population, can we expect further education property tax increases in subsequent years?
Well, I can say this. We were down around 28.5% and felt that was not an appropriate level to be at. The province has consistently been around 33% in years past. I think we're moving to 31.6% in this year, but the goal will be to move to 33% the following year and then hold fast at 33%.
Follow up, Janet?
Thanks for that. And I just want to go back to this idea from 2019 when your government first floated the idea of a revenue review panel to look at how Alberta generates money. I'm wondering how much of an appetite you have and whether you'd make any solid plans to create a revenue review process given what we're seeing today in the world economy.
Yeah, well, I hope to lean on Albertans' insight and priorities in a more public way this year. I think we need to have a lot of conversations, and I definitely want Albertans' insight about how we move forward. So that will certainly include revenue. I know people have talked about the ability to use AI, and I think one of the first places we can use it is Albertans' intelligence and help them guide us through this process.
Thanks, Janet. Operator, can you put through the next caller?
Your next question comes from Jeremy Thompson of CTV Edmonton. Your line is already open.
Hi there. Thanks for taking my question here. My question is about the $106 million for downtown Edmonton revitalization. Basically, we heard that there's a kind of a new project, a new facility plan for that space beside the arena, and also money in there for demolition of the Coliseum. Just wondering, what more can you tell us about that new public event space, when it might be coming, and what its purpose is?
Well, I don't know if I can give you too much detail. I might need to lean on the Minister of Municipal Affairs for that. But I can tell you that it is a three-way partnership between the city and the Oilers Group. Our portion of the investment is $106 million over 3 years in capital grants to the city of Edmonton. That involves the demolition of the Coliseum. I know they have some housing plans and ambitions around that site, and I don't know a lot about the event center. I just know it will have public access, and I probably need Minister McIver to fill in the rest. But it's a three-way partnership, and it's capital grants to the city is our portion.
You have a follow-up, Jeremy?
Yeah, follow-up, still just kind of in the vein of city and the city of Edmonton. There's money in this budget to reinstate the grants in lieu of property taxes that were sort of dialed back in 2019 and 2020. Notice there is no sort of back pay for those missed years in payments. Wondering why that might be, if that kind of money is coming, and whether there are any restrictions on how the city spends those grants that you're starting to fully pay again.
Back pay, absolutely not. The Premier was she was very clear on this. She wanted this program reinstated. We're going to reinstate it over 2 years, so it will be fully reinstated in budget 26. I think it's at 75% in this year. So that's a great thing. The city of Edmonton is the biggest beneficiary of that return to that policy change. But no, $5.2 billion deficit and not a path back. No retroactive payments.
Thank you. We're going to go back to the floor. Go ahead.
Hi, Minister. I'm Lily Palenchik from the Gateway. In this budget, base operating grants provided to public post-secondary institutions are remaining at 2024 to 25 levels. Institutions and student unions have increasingly been calling for the government to restore operating grant funding for Alberta PSIs to 2019 levels, as cuts have impacted services and students. Does the government of Alberta share the concern that PSIs have about their financial sustainability amidst continuous cuts and limits on alternative revenue, like domestic tuition caps and international study permit caps?
I think we share concerns, and we share concerns about many things. As I've said, that decision wasn't made to increase it, neither was the one to cut it. And that's the kind of balance we're looking at across the table currently. So I think that shows our support given the financial position that we're in.
You follow up?
Are there factors that would make the government consider restoring full or partial funding to 2019 levels for PSIs?
A more optimistic forecast would help.
Right, thank you.
Thank you. Anyone else? Go ahead, Carrie.
Minister, thanks for taking my questions. The contingency fund doubled to $4 billion in light of the threat of tariffs. Can you give us some sort of idea on whether you're considering relief programs, like what that extra 2 billion might be for relative to tariffs?
Okay, so I would say one thing is we exceeded the 2 billion this year. We did have a fairly rough wildfire season again. So there's that to begin with. We'd already exceeded the 2 in this year. We know we have compensation pressures coming. That's another piece that we know, although not fully. If I knew what it was, I'd put it in the line items. But the tariff scenario, in my opinion, I don't want to get anyone thinking that this is going to mean ad hoc subsidization programs. This is my way of having flexibility and powder. That decision could be made. I'm not saying it couldn't, but I don't want to, preposition that. Is to deal with our existing programming. One of the things that hit the contingency this year in a big way was income support. Welfare in the SCSS file. If we see where our unemployment rate is headed to, and the slow way that it's going to come down, that's a major concern. And in the different scenarios, it can be even more dramatic. So I would frame that as being able to deal with the programs that we have.
That was very helpful. Thank you. For 2 days in a row, the health minister has said that AHS is a black box. And for years, the government has not known what has happened to the money that goes into this black box. As the man in charge of Alberta's public purse, can you explain how you can support a health minister who is publicly saying, I don't know how AHS spends its money?
Well, I'd maybe start by, in my role, how health is a very tough nut when you're the Treasury Board Minister. You don't have a lot of clarity or line of sight. The budget is so big, and they do have ability to move within it. Usually what I see is their pressures. I see them coming to me saying that here's another pressure that we can't deal with, fund it. But when you actually talk about the baseline grant, there isn't a lot of clarity even for me. So I would share definitely some of those feelings. As for supporting her, yes, I support Minister LaGrange. She has a very tough job in refocusing the health system. I know there's ongoing questions, and I'll just say fully support the Auditor General's report. I know the Premier will have more information about an independent review soon. I want to see those. You see the challenge in front of me. I definitely want to make sure that public dollars go as far as they can. But I haven't seen or heard anything that would make me not support the minister.
Thank you. One more on the floor, and then we'll go to the phones. Go ahead, Shay.
Thank you so much, Shay Lanskowski with CTV News Edmonton. I'm wondering, what is your plan to pivot should we see the worst case scenario realized when it comes to tariffs as early as next week? Could we see a second budget having to be released based on a growing deficit?
Well, we're going to lean on the quarterly reports. So, like I said, we had to have this built by the 6th. That went to print 2 weeks ago. We will do the first quarter report in July. That's the beauty. We have the most transparent and robust reporting system of any province in the country. And, I don't want to say, we better see what comes first. The government has the flexibility to respond, and we will. It's one thing to have to forecast on what you don't know, but to take the next step and say what you would do, I think we better just wait.
And going back to one of my colleagues' earlier questions about finding a balanced budget, is there any plan to get to a balanced budget by 2028? And is there any scenario in which you could envision actually having to change the fiscal framework legislation that your government introduced to allow for further years of deficits?
Well, there's always ways to get there. As complicated as this is, it's also pretty basic. You got revenue and you got expense. So we can look at both of the sides of the ledger in a very deliberate way, and we can get to balance. It's just, what are we prepared to not do, or what are we prepared to ask from Albertans to pay for what we're not prepared to go without. So there's always a way.
We're going to go back to the phones for a few questions. Operator, next caller, please.
The next question comes from George Lee of Fort McLeod. Your line is already open.
Thanks, Minister. I'm just wondering about community safety, which is listed in your strategic plan, and I'm just wondering if, given the problems with recruitment of RCMP, and given the proportionally higher property and violent crime rates in rural Alberta, I'm wondering if there's anything specific in this budget that actually addresses that, given that it is considered a marker for the success of your programs.
Well, we did see a substantial increase in the PCIS public safety budget. I know Minister Ellis has many priorities on the go, and I would characterize them as attempting to fill the gaps across the province. Where those situations are the worst, get the attention first. But you're not wrong, and that's why it's been a priority of this government, and why not every ministry and department saw an increase at all. That one did.
You have a follow-up, George?
Yes, I'm just wondering, are there technical solutions that the province might be looking at to rural crime, such as using IE, reducing or using AI, reducing administrative work of the actual boots on the ground, so that there's maybe fewer boots in the office, more boots on the ground? Is there anything along those lines this government is looking at?
They're looking at everything, and best practices from around the globe, and ways that they can use technology. We also have a challenge within our court system as well that's well documented. So they're looking at everything.
Thanks, George. Operator, next caller, please.
Your next question comes from Zach Delaney of Edmonton Fund. Your line is already open.
Thanks for the question. The budget highlights housing as a bright spot and expects home building to remain robust, but the tariffs threaten to increase the cost of materials, which is expected to also reduce the activity of home building. So I was curious, why does the province expect home building to continue at a high pace despite the tariffs?
Well, because it's still catching up to the people. They've been lagging. They've performed better than every other jurisdiction. I think that is somewhat to be expected. The province, municipalities have actively, cut a lot of red tape around zoning and the like to speed up the process, so we can do that part quicker. We don't have natural impediments like water around some of our more metro citizens and cities in the country. Looking at Vancouver, Montreal, Toronto, different issues. So I think we're well positioned that way. The cost of everything it takes to build the house, certainly tariffs can impact that, but we still have such a delta between us and the major cities. We don't see that changing.
You have a follow-up, Zach?
With the dampening of the home building, which was mentioned in the budget, and such a strong demand for housing in the province, how can Alberta keep its affordability advantage in the most important element of affordability, which of course is shelter?
Well, I think we keep your taxes low. We keep focused on the economy, continuing to create jobs. That's the high-level priorities of this government, and to cut red tape to continue to build houses everywhere. That's the best. That's the best we can do.
Thanks, Zach. Operator, next caller, please.
Your next question comes from Jason Markusoff of CBC Calgary. Your line is already open.
Hi, Minister. Thanks for taking my call. This is a famously deficit-averse and debt-averse province. Of course, we're also tax-averse. How comfortable do you think the public will be with this $5 billion deficit, balanced, I guess, by the fact that people are paying a tax cut? That's contributing to part of that.
How comfortable will they be? Well, I don't expect them to be completely comfortable. And you're right. I've often said I don't know how fiscally conservative Albertans are, but they're definitely tax averse. That's something I've shared with my interprovincial colleagues. But I would say we need to ensure we have an understanding. The population growth that we saw was one thing, and it still wasn't, we still hadn't caught up to it. So we've made a deliberate choice to accelerate school construction, to be there to support our public services through this, and we still hadn't caught up. And I should just say that is a good thing. I would much rather deal with this than stagnation and decline. But you're looking at a budget where WTI this is a $6 difference over last year. The sensitivities are even more volatile. So I would say, when it comes to comfort, I would just say I hope they're eager to help me find the solution that they're comfortable with, because we do need to build a path out of this.
Follow up, Jason?
Yeah, thanks. My follow-up is, in your interview with the Premier, I asked her about your conversations with her about this tax cut idea and the fact that this could lead to a deficit. She said you had pretty robust conversations about this stuff, and you're the one who exercises caution. How much did you need to be brought along to approve this tax cut in the budget? Because it sounds like it wouldn't be something that you'd be inclined to want, given that it will add to the deficit this much.
Well, I'd say this. You're not wrong. If it wasn't for the position that we're in with the tariffs oncoming and the uncertainty, I might have had to get drugged to this point if I was going to do this. Balanced budgets mean a lot to me. I don't want to put Alberta in a position long term where this task I'm about to take to provide a path back is even harder. But due to the uncertainty, due to the affordability concerns that we're seeing, it seemed like the right time, and I fully endorse it.
Thank you, Jason. We're going to go back to the floor for a few questions. Go ahead.
Hi, Amanda from the Griff at McEwen. So Budget 2025 has post-secondary institutions' own source funding up 5 percent points from last year, along with an increase to inflation. How does the government expect this to affect caps on tuition increases?
Oh, that's a good question, but I might have to take it offline with you, Miss. We can get into that with the team if you'd like. I don't think I can do that here.
Okay, and then one more, just leading to the current panel review on post-secondary funding, how did university revenue concerns affect Budget 2025?
Well, you have to balance everything. I would just take you back to the ministries that saw decreases in their budget. Some were held flat. Certainly wasn't advanced education, with a continued investment in the capital side, trying to build the skilled people to fill these jobs that we need. So it's a priority. I hope that shows. Like, I know everybody wants more, but the real question going forward is going to be a lot harder.
We'll get back to you on your other question. Go ahead, Catherine.
Yeah, so Catherine Gurkowski, Alberta Today. So on the one hand, I'm hearing you say this situation we're in just proves the need to reduce our reliance on oil and gas revenue. On the other hand, I'm hearing, hey, this tariff situation means we need to build more pipelines. So can you circle that square for me? How are we going to be building these long-term projects like pipelines while also reducing reliance on oil and gas?
Okay, I'm going to try to go back to the beginning here. So sure, we want more pipelines. We always have. That wasn't a deficiency of ours. I'm very appreciative that the rest of the country seems to be on board now and sees that it's a priority, and that if we have potentially unstable trading partners that are our biggest trading partners, that egress for all of our products, including oil, has to be a priority. So I think the regulatory process across the country is the first step. That's not a change from our perspective. When we talk about our reliance on it, talking more about the revenue structure of the province. More egress, more capacity to grow helps that. So I don't see them as different things in that regard. You know, we have a lot here. One of the first questions was, we're sitting on this. How is this possible? If we can get more out and sell it to different and different markets around the world, we're in a much better place.
And surplus cash isn't exactly a problem for this budget, but you are amending your fiscal framework to, instead of just debt repayment for that first 50% of a surplus, you're now allowing debt repayment and more payment to the Heritage Fund. Can you explain the thinking behind that?
Well, the thinking is this: we're trying to, modernize our treasury approach and take Albertans along with us. I want Albertans to focus on the net fiscal position of the province. That's going to be very important as we grow the Heritage Fund. So what all that does is say is the first 50% of surplus cash has to improve our net fiscal position. And the choice can be made if that's an investment in the Heritage Fund or debt repayment. And then the other three options still exist for the other half of the surplus cash in the Alberta Fund. So it's a small distinction, I guess, but it's important to us. I'm agnostic towards one or the other, at this point, and you have to be if you're going down this path. But I think it's the right thing to do for Alberta, certainly.
Go ahead, Jack.
Jack Farrell with the Canadian Press. You've mentioned a couple of times now that we still haven't caught up to the rather insane population growth we've had. And it's pretty obvious in this budget, like we're not boosting the operating expenses for ministries like health and education at the rate of population plus inflation. So I guess the first part of that question is, are you personally concerned that we're going to see the same issues that we have been seeing with oversized classrooms, hospital emergency room delays, doctor shortages, all of that? Like, do you think that'll just be a continuing trend if we're not funding those ministries at that rate?
Well, I think if you look at health's budget, for example, from budget 24 to 25, I think it's about a 6.3% increase. So we're seeing substantial investments. When I say we're chasing it, a big part of the side that we're chasing is the revenue side. It takes a long time to, get tethered to the job market, be in the right time of year to actually pay your taxes and the government to receive them. What doesn't take a lot of time is to use the services. That happens immediately, and that's part of the chase that I'm talking about. I think you're going to see, as you already have the last two budgets, ministries like health, education, social services are what we're going to deal with first, and then everything else will be looked at after. And that's, I see it being that way until we catch up. Population growth is going to go down. We were at 4.4% last year for the census year, like July to July. We're expecting that to be more like 2.5% this year, and then we will catch up. But you're not wrong. We need to invest in those places, especially.
Follow up, Jack.
Yeah, and then with the income tax cut, it's also there's a nice graph in the budget about fee increases, not including the education property tax, which is a substantial jump. Like my rough calculation was 6.25% for residential property homeowners. It's a different percent for non-residential property owners. But with the fee increases, and this is not a non-exhaustive list, like the cost of registering businesses and charities is going up 30%. There's some higher fees for post-secondary institutions payable to the government, court search fees going up, not like, life-changing fees, but fees itself. So I guess I'm curious if you think the fee increases might bite into the income tax cut and the affordability that it's promising.
I think it'll be dramatically different scales. The income tax cut is substantial for individuals and for families. The fee increases. We did look at not an exhaustive list, but we did look at things that were brought by ministries that they said, this is an area that we should maybe pursue more of a cost recovery structure, or this is a fee that hasn't been increased in 30 years. Should we look at this? And that's kind of the lens that we took to it, while asking the question, how does this compare to everyone else? We don't want to go from, a 30-year outdated fee to putting us, above Saskatchewan. So we tried to make sure that we were Still below everyone else, but just trying to get things up to date.
Okay, Sean, you'll be our last question on the floor, and we'll finish on the phones.
Thank you. Sean Amato with City News. As we speak right now, there's hundreds of QP support workers outside. They're protesting. I'm hearing everything you're saying about this being a tight budget, but what is your plan? I guess your reaction to their protest and also your plan to getting these folks back to work.
Yeah, well, I'm glad you asked that question. I think maybe I'll start with, bargaining at a high level. We're at the tables with all of the big six currently. And, I'm just going to speak at a high level. I'm not, negotiating in bad faith here. I'm just saying that, it's important to us and in my job that all of the public service is paid fairly. And when I say fairly, I mean at market. I mean data-driven, at market wages. The public sector bargaining and coordination office, we lean on them to have that data in real time. And I want to make sure that we're in that range. And I'll tell you what happens if you're not in that range. You see zeros and freezes for a decade, like we have seen, because we were out of market. I don't want to have recruitment and retention challenges, but I certainly don't want to be out of market again, considering everything else we're discussing today. So when it comes to the QP specific negotiations, we're supporting the school divisions that are asking for that support. The deals that are from 2020 to 2024, 60 of 67 have been settled. There's a clear settlement trend that QP itself helped create, and the deals going forward, are going to be extremely fair, in my opinion. So what I would say is, come to the table. We'll be at the table. If unions want to push their members to other action, we will deal with it. But it's not something that we're looking for.
Follow up, Sean.
So on one hand, Albertans are getting a break on their income tax, but on the other hand, the provincial portion of their property tax is going up. On average, it's about $200 in Calgary.
And it'll go up again next year.
Sorry, can you explain that? I don't know.
We're going to 33%, and we're going to hold. It's going to 31.6 this year, and it's going to 33 the following year.
Okay, so your government has been accused of downloading responsibilities onto municipalities. I think we'll probably hear that again today. Why shuffle the tax burden a little bit onto municipal property tax bills rather than maybe split the difference on the income tax? Like, why is this being done?
Well, you're seeing what's happening in the education line item. We're having to fund education in a major way. Historically, we were at the 33% or higher. We've ceded that space to the municipalities and got down as low as 28.5%. We don't see that as sustainable for us going forward. I can't tell you about what the city's using, the funds for with the rest of their increases, but I can tell you where this will go, and it's needed.
Thanks, Sean. We're going to go to the phones. Operator, next caller.
Your next question comes from Irene Toombs of Livewire Calgary. Your line is already open.
Thank you for taking my question, Minister. Asking about the $96 million increase to the local government fiscal framework, and how much of that $820 million this year, an estimate, would be for Calgary itself.
I couldn't give you the Calgary itself, too granular for this. I can get that number for you. The increase is just based on our revenue sharing model. Revenue went up, and so does our share.
You have a follow-up?
Yes. Asking about the Green Line funding in the budget as well, Minister. $772 million for the Edmonton and Calgary LRT. Again, how much of that might be going towards the Green Line here in the city?
There was Green Line funding existing in the budget. That is ongoing, and I haven't seen any new asks come to Treasury Board for any new arrangement.
Thank you. Operator, can you put through the next caller?
Your next question comes from Sandra Stanway of Brooks Bulletin. Your line is already open.
Good morning. Hello.
Hello.
Hello. Sorry about that.
Sorry about that. Good afternoon, Minister. Just a quick question regarding the CDC funding. I see there's $5.2 million for the two CDC facilities. Is that $5.2 million each, or is that $5.2 million divided by the two facilities over the next 3 years?
Sandra, I'm sorry, that's pretty deep down in the agriculture budget. I will get you some details, but I know that they were looking for an investment to, upgrade infrastructure. There may be different partnerships possible down the line. We'll get you that. I just don't have it in front of me.
You follow up?
I appreciate that. Thank you very much. No.
All right, operator, can you put through the next caller?
Your next question comes from Scott Strasser of Calgary Herald. Your line is already open.
Thank you. I think one of mine was already answered, but I wanted to ask about funding for low-income transit passes. I think we heard there's $16 million for Calgary and Edmonton this year, but I don't believe we actually got what the split is for each city. Is it 50-50?
I'm afraid I don't have that kind of detail in front of me. The 16 million is correct. I think it was a combination of last year started with 5 million in the budget, and then in year it was there was additions made and it added to 16. So it's the same amount. I expect the sharing mechanism would be the same, but we will get you the number. I don't have it, sir.
You have a follow-up?
Okay, no worries. Well, my follow-up was, I think, already asked about the property tax requisition impact on Calgary homeowners, but just to confirm, is it $200 a year more?
Well, I can give you my best recollection. I think it's $239 for Calgary and $92 for Edmonton. I don't have any calculations for any other cities in the province, but and that's directly correlated to the home values. That's median home value estimate, so would vary greatly depending on the value of your home.
I'll confirm the Calgary and the Edmonton numbers for you, Scott. Operator, can you put through our final caller of the day?
It's right. You don't have to confirm that.
Your next question comes from Robson Fletcher of CBC News. Your line is already open.
Hey, thanks. I think you just answered it in that previous question there, but maybe if you could just elaborate, because I think for an average person who sees the number at $239 for a median Calgary homeowner versus $92 for an Edmonton homeowner, could you just elaborate on why Calgary homeowners are going to be paying more for the education property tax increase as you move towards that 33% target?
Yeah, it's simply just the values of the homes on average. No other fancy calculation. The average in Calgary is much higher.
You follow up, Robson?
No, I think that pretty much covers it. Thanks very much.
All right, everyone. That concludes our press conference today. Thank you.
Hey, can you indulge me for 1 second, Justin? I should have done this at the start, but while I have an audience, I wanted to thank some people. This is always a really tough process, and it was doubly tough this year, all things considered. So bear with me. I just want to thank Catherine Rothrock, James Forrest, Robin Dutchminski, Dana Hogeman, Mark Kleefeld, Stephen Thompson, Paul Labane, Lillian Yu, Lyndon Epp, Stephen, I'm going to butcher this, Stephen Tahachik, Sukhpal Hothi, Gordon Brenner, Kemi Kufor Bochi, Kate White, Keely McBride, and Lisa Shankaruk. I can't say enough about dedication of these public servants, the work that they do, and they do it because they think it's noble, and they really care about Alberta. So just want to thank them on behalf of all Albertans very much.
Thanks, Minister.
You bet.